Ever felt that? Like you're strapped into a market rocket, it takes off, and you're just wondering, wait, did I miss the launch entirely? We've all been there, I think.
Oh, absolutely. That feeling of chasing is intense.
Welcome to the deep dive. Today, we're really trying to cut through some of that noise. We're looking at Ethereum's recent big run-up.
Yeah, ETH has been on quite a tear.
Exactly. We're digging into what's driving it, what might be next, and crucially, we're using this analytical piece as our guide. It's got some key things it says you really need to watch.
Right. It's a piece that lays out targets, risks, the whole picture based on recent market action.
Our goal here is simple. Help you quickly get the main insights, the potential upsides, and importantly, the warnings about where Ethereum is right now.
Yep. So you can feel informed without needing, hours staring at charts. We're trying to distill it for you.
Okay, so let's start with the big picture this analysis paints. It talks about a bullish breakout for Ethereum, and it says this has, and I'm quoting here, invalidated the bearish blue scenario. That sounds pretty definitive.
It does, doesn't it?
Yeah, what exactly does that mean, invalidating the bearish view? How strong is that signal, according to this source?
It's actually a pretty significant statement in technical analysis. When it says invalidated the bearish scenario, it means the price action, the way the market moved, basically broke through levels that would have confirmed a downward trend.
Ah, okay.
So Ethereum pushed above key resistance points. That strength flipped the script, essentially.
Right.
And that leads to what the analysis calls the preferred bullish white count. It's not just jargon. It signifies that the momentum, the underlying market structure, it now heavily favors more upside. The potential downside scenario just didn't play out because buyers stepped in so strongly.
Okay, that makes sense. The market basically voted with its money against the bearish view.
You could say that, yeah. The buying pressure overcame the selling pressure at critical points.
All right, so the big picture is bullish. Now, let's get down to the specifics. The numbers. What are the key price targets, the resistance levels, the support zones this analysis says you absolutely need to have on your radar?
Okay, let's break those down. The analysis points to the next target for ETH being $4,400.
It's $4,400. Okay.
Yeah, and it specifically notes this is approaching strong resistance. So you should think of this as a potential initial ceiling, a place where selling might pick up.
Makes sense. Profit-taking zone, maybe?
Could be. Or just a natural pause point. Now, if we do see a pullback from there, or even before, the analysis identifies a key support area. It calls it the potential pullback wave 4 support zone.
Wave 4. Okay, and where is that?
That zone is pegged between $3,160 and $3,678.
So $3,906 to $3,678, that's a fairly wide range.
It is. It reflects, the potential for volatility even within a corrective phase. Think of it as a target area where buyers might step back in if the price dips. It's seen as a potentially healthy correction within the bigger uptrend.
Right, a breather.
Exactly. And then looking longer term, the analysis gives a final fifth wave target.
The final wave, okay, and that is?
$6,000 plus on.
Wow, okay. $6,000 plus. That's a significant jump from here.
It is. That fifth wave represents like the potential final push of this major upward cycle according to the specific Elliott wave count. So it's a longer-term potential peak for this rally.
Got it. So $4,400 next resistance, $3,160 to $3,678 as major support on a dip, and a potential longer-term target way up at $6,000 plus. Those are definitely numbers to keep in mind.
For sure. Key reference points.
But okay, let's shift gears a bit. Beyond the charts and numbers, what about the vibe? The market sentiment. This analysis notes extreme bullishness. It even draws a parallel to the 2021 hype. Now, anyone who was around then remembers, well, it was wild. Explosive gains, but also some brutal drops.
Definitely. Very volatile.
So is this extreme optimism a good sign now, or is it flashing a warning?
Well, that's the fascinating part, isn't it? This extreme bullishness, the kind that feels great, the analysis flags it. It calls it a warning sign.
Really? Okay. Why?
Because, as the analysis puts it, overconfidence can lead to sharp corrections. It's that classic market psychology, right? When everyone is absolutely certain it can only go up, when there's euphoria.
That's often when things get dangerous.
Precisely. It's like everyone's on the same side of the boat. The analysis specifically compares it to 2021 to remind us that peaks and hype often come just before significant pullbacks.
Right. Need to stay grounded.
Exactly. Now, the analysis does say there are no immediate reversal signals right now, so it's not predicting an imminent crash.
Okay, that's important.
Very. But the message is clear. Stay cautious. Enjoy the ride, absolutely. But don't get completely swept away by the excitement. Keep your risk management in mind.
Makes sense. Enjoy the party, but know where the exits are.
That's a good way to put it.
So we have this strong underlying trend, but also this caution flag about sentiment. What about the very near term, like right now? Is the momentum still there? Any really tight levels to watch day to day?
Yes, good question. The analysis confirms that for now, momentum remains strong. So the immediate upward push still seems to be active.
Okay.
But it highlights a critical level it calls micro support. That level is $3,776.
$3,776.
Micro support.
Right, and the key phrase here is it must hold for continuation. If ETH breaks down below $3,776 and stays there, it could signal that the immediate upward thrust is pausing, or maybe a deeper pullback is starting.
Gotcha. A very short-term line in the sand.
Exactly. And the analysis also mentions we might see some minor pullbacks before testing $4,400, $4,600. So don't be surprised by little dips along the way. They could even be healthy, shaking out some leverage before the next move up towards that bigger resistance area.
Okay, so still strong. Watch $3,776 closely. Expect maybe some bumps on the road to $4,400.
That sums up the short-term picture pretty well, yeah. So let's bring this all together for you, our listener. Thinking about practical steps, managing risk. If the analysis says the reward-risk ratio is less favorable near current highs, what does that actually mean in terms of strategy?
Yeah, that's a crucial point on risk management. Reward-risk ratio is less favorable. Basically means if you jump in right now, near the recent top.
You're buying high.
You're buying high, exactly. Your potential upside before hitting that next resistance, $4,400, might be smaller compared to your potential downside if it pulls back to that support zone, $3,160, $3,678.
Right, less potential gain for the amount you're risking.
Precisely. So the suggestion from the analysis is it might be better to wait for better entries on dips. Look for those pullbacks towards support rather than chasing the price up here.
Patience is key then.
Patience and discipline. The analysis also explicitly warns to avoid emotional trading because these strong uptrends, these third waves, they can extend, they can go higher and last longer than people expect.
It leads to FOMO, fear of missing out.
Huge FOMO. People pile in at the top, driven by emotion, not strategy. That's often where they get hurt.
Okay, so patience, avoid FOMO. Are there concrete action steps?
Yes, the analysis boils it down to a few key things to monitor. First, watch $4,400 for resistance. That's your next major hurdle.
Okay.
Second, track $3,776 micro support for the immediate trend direction.
Got it.
Third, track $3,160 or $3,778 closers support as the zone to watch if a bigger pullback happens.
Right.
And finally, it suggests following updates on X, formerly Twitter, from the original source if you want real-time tweaks to the analysis, as things can change fast.
That's super helpful. Specific levels, specific actions. It really helps cut through the complexity.
Definitely gives you concrete things to look for.
Okay, so let's quickly recap this deep dive. We've looked at Ethereum's strong bullish breakout, which seems to have sidelined the bearish case for now. We've identified key price levels. $4,400 is the next resistance. That wider $3,678 zone as major support, and the longer-term potential target of $6,000 plus Milla. We also touched on that critical micro support at $3,776 for the short term. And importantly, we discussed the caution needed because of that extreme bullishness in the market sentiment.
Yeah, balancing the strong technicals with the potentially frothy sentiment.
Exactly. It's a nuanced picture.
It really is. And that final note from the source kind of perfectly captures that balancing act. Enjoy the rally, but stay disciplined.
Discipline. Seems like the key word today.
Always is in trading and investing, but especially when things get exciting like this.
Absolutely. And maybe here's a final thought for you, our listener, to chew on, drawing right from that analysis. It reminds us that markets can reverse when euphoria peaks.
That's powerful.
Yeah. So as you're watching things unfold, not just with Ethereum, but any asset, maybe ask yourself, is this move driven by solid fundamentals and steady buying, or is it getting fueled mostly by, crowd excitement? Pure euphoria.
A really important distinction to try and make.
It really is. Thinking about that might help you navigate these exciting but definitely unpredictable market times